My name is David Hickson, and you are not experiencing deja vu. This is not the webinar from the 16th of October, but it is a very quick extra video that I felt I must record because in the webinar I promised that I would show you the composite model line for the analysis that we were speaking about. And in the excitement of the moment, I forgot to do that. So I'm recording this very quick video to show you that composite model line. Please make sure before we take a look at that line that you have read and understood these disclaimers. Now, if you haven't yet watched the video of the webinar itself, then this little quick video isn't really going to make very much sense to you. So please take a look at the description underneath this video where I will put a link to the main webinar so that you can go and watch that and then come back and watch this addendum video. So let's take a look at Sentient Trader, and this is the analysis that I was discussing in the webinar. As you can see, it has the 6-year cycle in it, and so let's take a look at the composite model line. I'll click that button, and there is the CML. Now, I must quickly remind you what the CML is. It's not some magical line showing you what the software would have been forecasting many years ago. What it is a composite line created from the analysis that is on your chart. So the software measures the cycle wavelengths and the amplitudes, and it puts that information together and generates the composite model line, which is effectively the line that the market would have followed if the only thing that was influencing the market was the cycles that have been found in this particular analysis. Of course, we know there are many other things that influence financial markets, and so the CML gives us an idea of how good and how accurate our analysis is. So I think you can see, if you have any experience with the CML, you can see that this is actually a pretty good analysis in that the CML is really following price very accurately. I can point out a few places where the CML differs from what price was actually doing. For instance, let me turn on this pen. Over here we have a discrepancy between the CML and the price line. And over here perhaps we have a little bit of a discrepancy because price moved a lot faster than the CML did. But generally speaking, the CML is following the price action very closely, which means that our analysis is a very accurate and detailed analysis of what was actually happening in the market over this time period. And we're looking at a pretty long period of time here. So let's just zoom in and observe one or two other things about what the CML is telling us. First of all, if we take a look at the last, 2 or 3 years, and let me add a cycle into that CML. I'll add the 40-day cycle into it, one of the shorter cycles, to give us a little bit more detail. Here we can see again that we have a few places where there were slight discrepancies between the CML and the price action, but generally I think you will agree the CML is following price very closely. So here is the interesting thing about this CML. You can see that the peak in the CML is over here, which is at the end of 2017, or to be a little more accurate, it is actually right over there at the beginning of December. And the other analysis that we were looking at, and I did show you the CML for that in the webinar, you might remember it was providing us with a peak in 2019, early 2019. And so this is why I felt it was really important to show you this analysis, and in particular the CML, because it is warning of a potentially much earlier peak in the price action. Now, there's an interesting thing that is happening here, because similar to the other analysis that we looked at, we do in fact have a very major peak here in 2019. So in many ways there are aspects of this analysis that are in common, of course, with the other analysis, one of the things that we spoke about yesterday. But I find it very interesting that the peak in the CML is at this 18-month cycle peak in early December of this year. Now, whether the market is going to do exactly this, of course, we really don't know, but it's useful to have that information, I believe, as we are watching the market rising in its current bullish phase, and we should certainly be standing by for a bit of a peak that could well be happening in December. Finally, let's zoom right in and take a look at the next trading opportunity that we were discussing in the webinar and see what the CML tells us about that. I did point out that the next trading opportunity was a move down from the 80-day peak down into the 80-day trough. And I also point out that that might not be a very interesting opportunity, because the better opportunity, in my opinion, is going to be when price bounces out of that forthcoming 80-day cycle trough, which is expected at the end of October, perhaps early November. So I've turned on all the shorter cycles so we can see the sort of detailed wiggling of the CML line, and you can see that, interestingly, it's actually projecting a little bit of a move up to a peak earlier next week, and then a move downwards, of course, into the 80-day cycle trough. But it's really pretty much of a sideways movement, and indeed the better trading opportunity is definitely going to be for the bounce out of this 80-day cycle trough and the move upwards. Now, you really need to be very careful, as I've mentioned several times before, about looking at the CML in too much detail, because there really isn't enough information to know what the 5-day cycle is going to be doing, or the 10-day cycle, when we're working with end-of-day data. If you're working with the intraday version of Sentient Trader, then of course you can play around with your much shorter cycles and use some more sort of trustworthy information. But I generally tend to hide those shorter cycles and get rid of those extra wiggles, so we can see pretty much a flat sideways movement, a bit of a dip down into the 80-day cycle trough. There should be a dip down into that 80-day cycle trough, but then we're going to see a really strong move upwards, and that, in my opinion, is the true trading opportunity that's presenting itself. Well, that's it for this very quick video. I hope that you found this informative and useful, and thank you again for your interest in Hurst cycles. I look forward to seeing you on our next webinar.